Welcome to the SSI Orbit podcast, a forum where we explore the ever-growing ecosystems of self-sovereign identity. And I'm your host, Mathieu Glaude. During this conversation, I sit back down with Stepan Gershuni for the second time on this pod, the first time being in episode 9, when we talked about the economics of self-sovereign identity. Now, if you haven't listened to that one, I suggest you do so, as it was a very interesting conversation that looked into how SSI could be applied to the paper-based world and also Web 2 business models. And then we ended up driving a bit down into Web 3 applications of self-sovereign identity, which is relevant for this conversation today. Now, this conversation is more focused on the impact of SSI on Web 3, where the main conversation point today is around DAOs, which is an acronym for Decentralized Autonomous Organizations. A DAO is the Web 3 version of a company or a community. So, think of it this way. If an NFT represents a piece of digital media, a DAO represents a whole media company. Quite cool. So in this conversation, we'll discuss what are DAOs and why DAOs are the next logical evolution in coordination mechanisms for communities and companies. We'll talk about why DAOs are in reality just a mix of decentralized identity and reputation. We'll talk about how the adoption of verifiable credentials with DAOs and open protocols could take off in a very fast manner over the next year. We'll discuss how a DAO could be a VC issuer itself and a VC verifier. We'll talk about the need for decentralized reputation mechanisms and trust scores and much more. Again, thank you for joining us today, and without further ado, here's my conversation with Stepan on how DAOs benefit from self-sovereign identity. Enjoy. It's looking like a hot DAO summer, and the excitement is kind of brewing up more and more around DAOs. I guess the equivalent of the excitement. There was a lot of excitement last year in 2020 around, I was going to say NFTs, but I think 2020 was more DeFi. DeFi was hot, and NFTs a couple of years before, and it always takes a bit of time for the mainstream excitement to catch up. So this year, kind of on the mainstream side of things, we had NFTs really becoming popular, and more and more people getting into the Web3 space because of NFTs. But it looks like DAOs have made a comeback in popularity, I guess, in the grassroots movements, the technology community, the Web3 community. There's a lot of very interesting opportunities to combine self-sovereign identity with DAOs. But before getting into that, since I know, Stepan, you spend a lot of time just thinking about DAOs and the possibilities there, I think it would be quite useful if you're able to give kind of an introduction for the listeners here on what is a DAO.
Yeah, sure. So hello everyone. Decentralized autonomous organizations, or DAOs, is actually quite old concept. It was created. You can argue that Bitcoin or Ethereum, the first blockchains, are the first manifestations of DAOs. And as we see crypto space becoming more mature, more applications and more users, more adoption, there is a need for coordination. As some of the companies grow and offer more complex products, there's also a need for the founders and just participants of those decentralized networks to make decisions, to collaborate, to coordinate. And I think decentralized autonomous organizations is a great tool. It is taking a little bit longer to figure out how this should work and to get to the same maturity stage as, for example, cryptocurrency, where cryptocurrencies are today. But for me, I agree that decentralized identity and self-sovereign identity is integral part of that. And probably a lot of the DAO, it has kind of bumpy history. The first DAO that was created, the DAO, it didn't last long. It was actually hacked quite quickly after its launch. Then there was a whole range of experiments. People were trying to build decentralized venture funds or just investment companies on blockchain. Some of that was successful, but a few problems still remain where decentralized identity can help. I think today in crypto space in general, people tend to remain anonymous or at least pseudonymous. So there's no need for you when you work or even when you're founder of a protocol, DeFi protocol, for example, there's no need for you to reveal your real name. You can build a successful business that operates at billion-dollar scale by being completely anonymous. And we have a lot of examples of that. Self-sovereign identity is actually a great tool because it allows you to stay anonymous, to keep the system decentralized. So every person has their DID. They don't have to reveal their real name. Yet you can build this provable profile and reputation of your previous activity. And basically, this allows you to enable this meritocratic reputation governance system, which the lack of which today results in quite a few problems. So, for example, hiring for decentralized protocol is a problem because some solidity engineers or people working in decentralized space, they don't like to have LinkedIn profile or just using centralized platform. There's also a problem related to decision making because you can create a protocol, you can give out tokens, but then how do you make sure that it's actually the optimal, that this governance system produce the optimal decisions? Because someone owning a lot of tokens doesn't mean that that person is the best suited to make all the decisions. So it can be a technical decision, a financial decision, a corporate structure decision. And what I see now, a lot of decentralized autonomous organizations are actually using this kind of fractal system where you have the umbrella DAO, which is the core organization that issues tokens and owns, somehow has access to the multisig and can control what's happening in the protocol. But then that is split into multiple sub-DAOs, and it can be dozens or even hundreds of those that are specifically focused on some features. There might be a small group of people that only focus on developing smart contracts, another group of people only focusing on business development or marketing or translation on different languages or distribution or hiring operations. So DAOs are really replicating the traditional hierarchical organizational structure, but one can argue it is a more efficient way because you don't have that management overhead, you don't have that centralization. It is much harder to collude or to force the whole organization to go into direction that not everyone agrees with. I think today, just looking at the evolution of the crypto, as you said, there was cryptocurrencies, then we had a lot of things, games, DeFi, NFT, decentralized identity. As those things mature, the management part of that becomes more and more crucial. If it's a protocol, like if it's Bitcoin launched by one anonymous person, it can remain so. But as it grows, as there's more and more people involved, you need some coordination mechanism. And I think it's a real need, a real problem that already exists today. And the solutions that we have are quite frankly suboptimal. There's a lot of room for improvement. So today, really, in things like protocols, like Cardano or Telegram Open Network, or even Ethereum, or maybe some products like Uniswap, Compound, 1inch, Yarn Finance, and so on. A lot of decisions are being made in the small Telegram groups on a public discourse forum and on Discord. So those are great platforms for communication. And then there's the on-chain voting. But all of that is not enough to successfully compete with centralized organizations. So banks or IT corporations, they have this efficient management structures that is hard to compete with. So that's probably one of the bigger opportunities for the crypto space. How can we experiment, how we can build open protocols? Same like in DeFi, there's an Ethereum network, and someone will say exchange on top of that, like Uniswap, and then there's someone who's building a more complicated strategy, how you can, for field farming, for example. So there's this openness of the protocol that creates innovation, and the same can happen in DAO. So you can create a very basic protocol, then on top of that, you can have a DAO that is specifically focused on maybe assessing people or assessing expertise, and or another one can specifically focus on providing some kind of like a group of professionals, like web designers who's doing work and getting paid for that. So I see a lot of discussion, a lot of innovation, a lot of great companies and protocols and just projects being built in this phase. And I do agree with the notion that DAOs can be the next big wave for the crypto in the coming years.
Yeah, so I guess like just to compare it against other things in the Web3 space, and I'll just use NFT as an example again, because it's a popular one right now. So basically a DAO would sit a level above an NFT, because a DAO could own NFTs, a DAO could create NFTs, can also do a lot of other non-NFT things, and is definitely could do more transformative things than NFTs. And so then the comparison would be an NFT could be a piece of digital media or a piece of software or something like that, whereas a DAO would be a whole media company, which manages kind of the rules and the governance and the incentives for this company in a decentralized, automatic way. And so that you mentioned coordination. I wanted to go a little deeper into that, because I think that's a topic where I'm thinking that some of the coordination issues that happen today could be resolved using SSI. And so I guess until now, it's been hard generally to coordinate having a lot of small owners or small stakeholders who get a say in decision making, right? And that's why you have these corporate structures, and you talked about this management overhead, and there's the only way of doing it, but that was the best way of doing it, is you had to create some central decision making and central structure and processes to help coordinate progress. Whereas in Web3, we're thinking about DAOs, the real thing is we're able to totally disrupt all of the structure that is in place today in a lot of real world corporations, because of a need to have coordination. You could do it very differently. So you kind of alluded to it in your previous point, talking about there's kind of, I guess, coordination within DAOs seems to happen within small subsets of the communities and in Discord groups or Telegram groups or wherever. How does that evolve further, so that really like the what everyone is trying to do here of having all these small owners or stakeholders partake in decision making, how could that happen smoother using self-sovereign identity?
Yeah, so I think fundamentally, DAOs are two things. It is decentralized identity, because you need to prove that it is an actual person who is making the decision or expressing their vote or casting their vote, not a botnet, not someone pretending to be multiple, just like a Sybil attack. And second part is incentive compatible decision making, which means that people have to be incentivized in the long-term outcome of that. And we see that happening with governance tokens. Although in a lot of cases today, it's the same thing that happened with ICOs in 2017, when people release tokens just because they want to raise money and they don't give too much thought into how those tokens will be used. And what we see again, in a lot of cases, governance tokens in DAOs are being sold, they appreciate in value, but then people don't use it, or people don't use it as intended. So for example, I don't have exact numbers, but if you look at just voting that's happening in major DeFi protocols, it's actually quite small number of people who actually participate in voting. So people don't care, like they, and that might be actually the best decision. Like if I'm token holder of Uniswap and then there is a decision being made about the design of the protocol, I think for me the best option would be to not to vote, because I'm not an expert in that. I'm not part of the development team. But then if we only allow certain people to vote, that means that we get back to centralization and we get back to traditional management, management system. I think moving forward, what has to happen, and why this is not only SSI is useful for DAOs, but also the fact of DAOs growing and their use cases and the adoption of decentralized organization is growing is also helpful for SSI, because in a lot of cases where we think SSI is useful, there's a problem of adoption, and that comes just from power of habit and inability to change mind of major issuers. For example, governments who should theoretically become the largest issuers in SSI, they're just slow to make decisions. And it's not specifically in identity space, governments are slow in general, and that's fine, because they're such big entities, and process bureaucracy is complicated. In private use cases for SSI, it's also sometimes hard to convince key issuers to come on board. Like if I'm a large bank or large KYC organization or insurance company or educational company, I don't care that much about SSI because I don't see immediate value. I have my paper-based, or I have my database with all documents that I issue. Okay, I need to be compliant, but there's other ways to become data protection compliant without spending that much time, money, and investing into SSI. And the synergy between DAO and SSI comes from the fact that in crypto space and Web3 space, all data is already digital. So you don't have that issuance problem. Issuance is actually abundant. Like not only all the data is already cryptographically signed, so everything that happens on blockchain is publicly available, cryptographically signed and anonymous. So I need to just prove the fact that I own the Ethereum address, and then I can just pull all my history, the fact that I participated in voting on Uniswap DAO, the fact that I made a certain number of transactions using Avi or Compound, the fact that I played a certain game, the fact that I bought something on NFT platform, and those, or maybe the fact that I deployed a smart contract, and those facts together, they create my digital reputation. And then we feed the theoretical idea is that we create as many data points as possible, and then we feed it into scoring algorithm. So all this data can remain anonymous. It can only be linked to Ethereum address or my public key or the ID. I don't need to reveal my real name, although I can if I want. And then there is a number of scoring models where people either build reputation for each other. So there's someone who has a well well-known and serious reputation in the community, and they can vouch for another person, for example, that they are a great Solidity engineer. And then me having that reputation event from someone that I'm a great Solidity engineer can help me get a job in a protocol, or maybe win a grant, or me completing a number of Gitcoin grants can also help to, again, maybe to help to prove my expertise, that I'm actually the best person to work on in a certain area, or vote for a certain for a certain decision. So this adoption problem, I think, will be solved in SSI. So there's still work happening with private market, with governments, with a lot of offline use cases. But I can see that it can happen much faster in Web3. And that's where a lot of innovation can come from. And again, I think this fact of openness of the protocols cannot be underestimated. That's really the key driver for innovation for Web3, the fact that you can build on top of other protocols. So if someone builds this reputation network, just connects different blockchains, then someone else comes and they build this great scoring mechanism, or maybe it's a assessment system where it is actually a real person speaking to another person and giving assessment about their, I don't know, engineering skills, or their artistic skills, or their financial skills. And then that data can be used by NFT platforms, DeFi protocols to score people. Like simple example would be a DeFi credit score rating. You don't need to reveal your real name, but the fact that you worked and you used multiple DeFi platforms and you have a certain number of amount traded, that means that you probably understand how it works, and that means that you probably won't burn all your collateral tomorrow just because of mistake. And that is actually, I think, quite interesting value proposition for someone like Compound or Maker, because they don't really benefit from people losing their deposits, their collateral deposits. Yeah. So a lot of ideas. Some of them are being built. I really love some of the discussions that are happening on Twitter lately regarding this decentralized communities and reputation for those communities. And yeah, really excited to see what's happening. Just to really excited looking at some of the projects and how they evolve.
If we take the example again, like before when I made the statement that an NFT in this example would be a piece of digital media, a DAO would be kind of a whole media company. This media company potentially wants to hire some gig workers to work on content, to work on software, to work on animations, whatever it is, right? Just like a DAO could be a lending company. So you could be using DeFi protocols, and you're inherently creating an internet native bank, but under the governance of a DAO. In this use case, you mentioned kind of when we're talking about reputations and stuff like that, in the traditional finance space, it's the lending company, it's the bank that sets their policies for what they need to do in terms of verifications or what risk they want to take if they're lending money out, and they have their due diligence for that. So that there's one part of that has to do with just adhering to regulations, and then the second part just has to do with their business model of making money. So if you were to take that model and just think of it in an internet native model, when talking about reputation, and if it's basically a DAO is looking to hire some gig workers to help progress on their mission, would the DAO be a verifier in this use case, that the DAO's governance would specify what they need, like they would, I guess, vote on posting some jobs or hiring some people. I understand that the issuance is abundant in these internet native use cases, and we could think about tons of them, right? Like social proofs or commits or just online certificates or whatever you want to prove that you have the certain skill set. But if a DAO wants to hire a developer to perform some project, would the DAO itself specify kind of what policies, what the policies are for the verification? Like, would you in fact have a DAO that would be able to talk to a verifier agent that would then ask for, I need one of these different things to be able to kind of move you to the next step in the process? Is that a good way of thinking about it?
Yeah, I think it's a great example. And again, if you start with SSI, a lot of SSI use cases, they start with just digitizing things. So we all have this paper-based driving license or passports or vaccination records, and SSI companies just have this amazing vision, which I really would love to see happening in real world, when we have all of that in the, I don't know, mobile device or somewhere available with just one click. You don't need to worry that you lose it or it burns or it's becoming, I don't know, wet, or you tear it apart, or your kid plays with it. This is actually, but this is also a problem for SSI companies. SSI is not the ideal, it's not the best solution for these problems. Really just because of the adoption of where we are in the adoption curve. So today, for a medical lab or for bank, if they really want to issue something in a digital format, they might just use PDF, which is much more widespread technology. It also has ability to, you can include digital signature in the PDF, like X509 certificate or something, or government issued digital signature. Then you can really even make this system decentralized. So except the PKI part, the PDFs document, you can also store them on Google Drive or a mobile device. So it's like verifiable credentials is not the only solution. And in some cases, it's not the best, just because some other technologies are more familiar and they've been around for much longer. PDF is, I think, like maybe 30 years old or something like that. And every browser, every phone, every operating system in the world natively supports it. So that is, sometimes I see it as a problem of really selling SSI solution. But the value of SSI, I don't think the main value of SSI is in just digitizing data. I think the value is in combining data from a variety of different sources. So when you have your KYC report as a verifiable credential, it is nice to have, but it's quite marginal value. You can as well have it as a PDF or printed paper or email or something else, and it's still usable. It still does the job done. But when you have 20 different sources of data, when you have your KYC report and bank statement and your crypto holdings and your, I don't know, driving history and the fact that you own some property, all of that data combines is suddenly becoming much more valuable for the bank when you're, for example, applying for the loan. So, but the problem with SSI industry, it is just much further away in terms of adoption curve. So it's hard to convince one issuer to become a VC issuer. It is exponentially harder to convince multiple, like 20, 30, 20,000 different issuers. So you need to create that network effect. And back to your question, when we're talking about DAOs, I think these going through that maturity or adoption curve can become much faster. And as I mentioned, this openness of protocols, the fact that you can build an application on top of protocol, which is built on top of another protocol, which is built on top of another protocol, that can expedite this adoption. And back to your example, if it's like a gig collective or collective of professionals who's doing work, and each one of them have decentralized and digital identity, and they have a number of data points, then that might be just one DAO. One DAO just connects people. For example, if it's like a web design studio, they get an incoming request for a work, then they somehow decide who's doing it. They get paid. The person who's done it receives like 95% of payment, and then 5% goes into the treasury, and that's just the analog of traditional company, like outsource company, for example. But then if you want to do scoring as a bank or maybe as a customer of that company, you can create, or you can have another DAO which is built on top of that, because all the data is portable, it is open, and you can have a separate protocol or a separate DAO which is just doing scoring. So for example, I can have a small DAO which consists of 5 professionals, and my only job is to choose the best designer who can work on your project. So as a customer, and this DAO acts as a verifier. So as a customer, they can go through both of those DAOs. In the first one, so basically the end result would be that you have people with their digital identities, and digital identities are just a set of attributes and verifiable credentials. And then there is some open scoring mechanism. So as a bank, I don't need to set up my own risk assessment and scoring, although I can. But as a DeFi protocol, if I want to bootstrap this process, I can actually trust another scoring protocol, which would really be just a smart contract. So it's open, it's auditable, it is maybe even community driven and generated. And then the person who creates the scoring algorithm, they can get 1% cut. It's very similar to what Yarn or why Yarn Finance is doing. They have this set of smart contracts where anyone can come create a strategy of how can you maximize your return in crypto. And then you, as a strategist, you get 5% return on that. So the same can happen with the scoring. Like if I have a great way to score designers based on their Dribble and Dribble account and Gitcoin grants and reviews, and maybe just personally speaking with them or giving them test assignments, I can create another decentralized protocol, which is just helping you to choose the best person to work on your project. And then I'm getting some maybe another 5% cut. But you as a customer, as a verifier, you now have a much higher level of assurance that the person who you work with, even though everything is anonymous, they went through this assessment process, and there is some rigid, strict scoring mechanism that is helping you to choose the best, the best person to work on your project. Something like that. It's like, I think all of these are ideas. I don't think I haven't seen this really implemented, but I foresee this in the near future because I've read a few papers and just read through some Twitter conversations. I think this is like some of the ideas that are in the air today, but we actually have all the tools ready to make it happen in reality.
Yeah, well, I think anything that is consumer driven like this could, like you could innovate much faster than if you're trying to do so in the constraints in other corporate structures. So a lot of the stuff moves quicker in the Web3 space. And I think the thing you said about the DAOs or anything really being stackable or forkable means you could really experiment very quickly. And with the openness, you could combine stuff together. So I like the idea of like, well, if I have a DAO that's all around, it's basically like a bank, well, maybe there'll be another DAO that I want to rely on for scoring that will, it'll be able to check for what It could be what crypto assets I have across different blockchains, which all of a sudden makes it very portable and interoperable. So if I have a DAO,
build your own build your own FICO score system, and that can be applicable for anything, not necessarily just finance scoring. It can be scoring of NFT artists, or scoring of a web designer, or content writer, or translator, or I don't know, mathematician, physicist, any area of expertise, really.
Yeah, as you were talking before, I was thinking of the example of just thinking of different industries that are very slow moving when it comes to innovation, and you start looking at a lot of industries that are where there's a lot of government intervention, whether it's healthcare, whether it's education. And education is kind of a cool one, because you can imagine creating a DAO for a bunch of researchers that will really want to progress in a specific field. And they could come together in a DAO to do research and publish research. And then to get into there, you could use another DAO that kind of does scoring around past contributions, or whatever needs to happen for these researchers to be funded for a project. But that means a DAO could be a verifier of verifiable credentials. A DAO could be an issuer of verifiable credentials as well. They could issue a receipt, they could issue whatever after a certain process is done. Does that mean a DAO, just like a person would have a decentralized identifier, an organization can, an IoT device can, would a DAO in fact have its own DID itself? So you could have peer-to-peer interaction with it. And I don't know if that makes much sense, but at least from the fact that if the DAO becomes an issuer of credentials, you'll be able to trace it back to that. Like if the DAO has a DID, you could trace it back to that DAO.
Yeah, and yeah, I mean, probably that there can be several technical implementations, and we need to experiment a little bit. But in general, if a DAO is just Ethereum smart contract, it already has an address. So it doesn't really have to create another deed, because it already has one. It has an address on the blockchain, and you can use it as like ETHR deed or LM. So there's a few DID methods that support Ethereum addresses. So I think the infrastructure for that is already actually built. And then the big question, and the one area I would love to see more people paying attention to, is the actual scoring models. And there's a lot of work that is done by great researchers that I was reading through in the past several months. And I think it is kind of unfairly not forgotten, but it's not, people don't pay too much attention to it as they should. So for example, the first white paper on this topic I read is called DAO Democracy by Ralph Merkel, who is a creator of this, of a lot of things in cryptography, and probably a lot of fundamental things without which Bitcoin or Ethereum just wouldn't be possible. And he wrote this paper, it's called DAO Democracy. He's showing the way how DAO can actually be a system for a state-level democracy. It's very futuristic. I don't think it's happening tomorrow, but he uses example of Bitcoin, how Bitcoin is decentralized organism that does job done for people, and then it pays people to support its life, because people run nodes and mining and miners, and then it does something valuable done for the people. In Bitcoin case, it's enabling these monetary transactions, and for that it's getting paid back in terms of fees that you pay with your Bitcoin transaction, and then it distributes back. It goes back to the miners and node operators, to miners. So in that paper, he also shows how you can set up a democratic system for the whole country, or even, I think he even mentions like for the whole world eventually, that works as a decentralized organization and allows to make decisions on every level, like political decisions. That's very like it's not too much details about how exactly that would work, but I think it's just an amazing idea, and it struck me. And then another paper I found by Samuel Smith, who is author of Carry, which probably people from self-sovereign identity world have heard of. And he wrote this paper on open reputation. Again, it's a system, it's a decentralized system that allows people to build a reputation score just by voting. And then he goes into details how can you make the system secure enough, how do you defend from different kinds of attacks, how do you implement it cryptographically. But the base idea is that basically what you mentioned, that there can be a decentralized organization. It issues credential based on some kind of scoring and internal computation. There can be a fair competition between those algorithms. And basically, what happens is the same thing that happened, like the difference of DeFi from traditional finance is that you disintermediate a lot of human functions with algorithms. You don't have central bank anymore. Now you have Ethereum or Bitcoin algorithm. And in DAO, you disintermediate this assessment process, which is usually assessment or scoring process, which is usually done manually by the DAO algorithm. And it becomes an issuer of that credential. So we kind of replace human manual bureaucracy with an algorithmic one.
Like an organization today, if I'm a hiring organization, I actually don't do IQ tests or stuff like that, because it's just you can't do that anymore. But they actually end up relying on the kind of IQ tests that kind of come out of SATs that come out downstream from universities and stuff like that. So it would be a similar concept to if I'm a hiring organization as a use case. I would rely on a decentralized reputation DAO to move forward with my process.
Yeah. So, for example, maybe Gitcoin would be a great example. I think they're moving into that direction. So they started with more centralized architecture and design, and that quadratic funding idea, where they just giving grants, and whoever is funding the work, the Gitcoin organization itself is adding a square of that funding amount. But that system, I think in the previous few rounds, they've seen that this system is being exploited. For example, you can create your own grant, you can donate money for yourself, and then your donation is matched by the Gitcoin pool. And that means that you can slowly drain this system, and it's not a really true meritocratic voting. And grants giving and hiring, I think those are two similar use cases, because you need to assess capability of a person to be able to complete a certain task. So that can be done as a part of DAO or as a separate DAO, where you collect those data sources, you do this assessment as a outsourced work. And I think important to make this work, you need to use mechanism design. You need to use tokens or some kind of crypto economics, because you need to create incentives for people to really do their job right. So, for example, if I'm assessing a person, an engineer, I have to have, as an expert, as assessor, I have to have my something staked at the DAO. Then I'm doing my assessment, and if my assessment is correct and diligent enough, I'm getting paid for my work. If I just randomly say that they're great and it turns out that it's not true, and not great in general, but in a very specific area of expertise, I will probably get slashed for my stake. So if you create these incentives, that means that you can basically outsource or abstract out the traditional assessment process. It even can replace some of the traditional institutions like universities, because you can get good at something without going to university, but you cannot get degree. And degree is something that a lot of employers still looking at as their like formal screening process. So you can become a great engineer. You never went to university. You never went to college. Just self-learner. And then you can come to this kind of DAO, go through assessment, receive your score, which is financially baked. So financially backed. So there's a clear incentives for both assessor and the candidate to not cheat in the process. Otherwise, they just get slashed. And this resulting reputation score or VC issued by the DAO can be equivalent or even more reliable than university degree, especially in some countries. You can just buy a university degree, and in this mechanism, it would you would just lose money, and it wouldn't make sense for you to try and cheat the system.
And the funny thing about the university degree too is it's just you could do if you're doing eight semesters or whatever, you could drop out after 7 and you're not able to get a job versus someone that has done the 8 and paid extra money to get the 8. But it's kind of like does it mean that you have 0 versus this guy has 1? That's not the case. You've definitely amassed skills, and so that gets into the conversation of kind of just getting credentials issued to you or stuff based on just micro credits or stuff like that. So you could build up kind of a portfolio yourself. You don't need to just get a piece of paper that's trusted because it has the writing of whatever university on there that is trusted in the real world.
Just to add to this, I think we can put it in a way that this algorithmic reputation, just digital identity, can provide you with more granular assessment, just basically more granular bureaucracy. It's not just 0 and 1. You either get it, a degree, or you don't get it. It's a score, and then you can have a lot of expertise tags like your math skills, your history skills, your Solidity skills, your JavaScript skills, your communication skills, and you can have different scores in each of those. It also makes it more inclusive because, higher education can get very expensive, especially in North America, and it makes it more flexible because you don't have just one try. If you go through this assessment and you get a bad score, it's your identity, it's your DID. You're always free to never reveal it, and you can always try again. So it makes it both more accessible and more flexible for people. So it creates inclusivity.
Yeah, it definitely levels the playing field, and as an employer who has hired many people over the past years, like that has definitely that one kind of university degree has been a thing that couldn't have cared less about for hiring people, and it still confuses me at times how much of an importance is still placed on that. So I guess like in still like in this space, employers are looking at university degrees. They just want to see that you have a university degree that's been issued by a real university. What we're seeing a lot now, even in the SSI space, is the whole concept of trust registries. So it seems like it's just it's trying to digitize the way things are done in the physical world today. So I see a piece of paper, a transcript or whatever, and I trust it because it has the university's logo on there, and it has the person's name on there. For digitally issued versions of this, people are looking at creating trust registries, and I'm sure people are looking at creating trust registries on chain as well, so that the provenance of a particular credential comes from a particular DID who has been approved, I guess, within the governance process of a particular ecosystem. The whole reputation oracles or the stuff that we're talking about, Web3, it seems like it serves a lot more kind of community-driven initiatives, right? Where I'm not relying on whether it's a government or some corporate structure dictating what's right and what's wrong in a trust registry. It's really, hey, if we want to create a solution, we could do so, and we could set the rules ourselves here. And if you want to join, then join. Great. If you don't want to join, then don't join. So it's kind of this the reputation oracle, or however you're talking about this, the scoring mechanism and stuff like that. Is it kind of like do you see it as more of like a Web3 equivalent of what people are trying to do with the trust registries, which is simply just convert a paper-based process to digital?
Yeah, I think it even goes further. So it's today we trust brands or just the name that we see on the paper because it's the best that we can do. We cannot go to every university, and really, as an employer, I cannot go to every university and try and understand what is their process, what do they really teach, who are the professors, what is their assessment algorithm, and how it is done. And same for the banks and for healthcare, for finance, for all different industries. So we simplify this process just by trusting this trusted actors, issuers of these documents. What can happen in Web3 is basically we should not trust the issuer, we should trust the issuance process. And in Web3, you can make this issuance process transparent, auditable, and you can basically have this almost perfect competition between processes. So I shouldn't trust I don't know, Onfido to do KYC just because they're a big company, but I can trust any DAO that does KYC and whose process I understand, or whose process was audited multiple times by other buyers and customers or just random people. So it is about making it more granular, because in decentralized space you can, unlike centralized space, you can make the business process, which happens inside the firm, inside the company, transparent and open as a smart contract, and that's the benefit of it. And then because it's transparent and open, obviously anyone can fork it, anyone can improve on it. It's much harder to create a defensive business, but if you really came up with this great way to assess engineers, for example, then you can you can build this kind of DAO and maybe use a token to extract value from every transaction that is happening.
It's such an interesting space, like with the, I guess the way traditional corporations are built based on kind of, you come in and you perform certain tasks, you clock in, clock out, you perform tasks under a certain number of hours. You need to be in physical location with more and more of business going digital and digital first. And a lot of, I guess, to your earlier point in the conversation, where in these internet native use cases, issuance of credentials is abundant. You wonder how fintech is eating away at traditional finance, and you have all technology. This is going to eat away of completely at how people coordinate on whatever initiative it is they want to do, where people could really, rather than being constrained to a certain job or a certain industry or stuff like that, it becomes much easier to do stuff that you're interested in doing with similar folks that don't need to be in the same location, and you don't need to have all the complexities of the legal red tape and everything that needs to go into place. And the fact that, again, like everything is just stackable and reusable and open, I think there's been a massive trend anyways towards openness. And I think like if you just look at open source code or projects and people are publishing stuff, and there's been a movement away from intranet for certain things, and people are putting more stuff public. It looks like everything is definitely moving in that direction where corporate structure and corporate governance becomes completely open as well.
Yeah. So today, corporations are incentivized to create this black box of whatever they're doing. If it's a bank, that would be a black box of their credit risk assessment process, or I don't know, financial management process. If it's a HR agency, that would be a black box of how do they source people. In Web3, it is open. So any protocol, any strategy, any business, it's all open on Ethereum. You can read that smart contract, you can copy it, you can launch the fork of it immediately. However, you obviously need to understand it deeply. You need to create some kind of competitive advantage. But because it is open, you can innovate, experiment at much faster pace, and it is also more trusted. So I think it's just the same philosophy, the same fundamental driving force that is powering SSI and DeFi and cryptocurrencies, NFTs and DAOs.
Aren't we lucky to be in this space? It's definitely going to be a hot DAO summer, and I look forward to going a lot deeper into this stuff throughout the summer and the rest of the year. It's just so exciting, the possibilities here. But Stepan, thanks for coming back on the pod and doing this with me. I tremendously enjoy the conversations with you, and I very much look forward to the next one.
Yeah, thanks a lot. Thanks for having me. Great conversation, great topic, and I think it's a great time to be involved in all of this.
Thank you for listening. Hope you enjoyed the conversation as much as I did. To stay up to speed with future episode releases, please subscribe to the podcast on whatever channel you're listening to it right now. If you have any questions or comments, please reach out to me directly. You can find me online. I'm quite active on LinkedIn and Twitter, so I look forward to hearing from you. See you all next time.